Remember me? We met last November at the all-you-can-eat fruit buffet get-together. Of course I remember you. How could I forget? I learned so much from our conversation that day, but I wonder if maybe you gave away too many of your secrets? I don't think I gave that much away. I mean, all I said was that the rebound strategy suits some people, but not everyone. A trend-following strategy fits your personality type better, I reckon. So I think maybe you should continue focusing on trend following, rather than trying to force yourself to adapt to rebound plays. This exchange took place on the now semi-defunct online message board Nichannel, back in the bygone days of 2004, between the legendary BNF, aka Takashi Kotegawa, and an up-and-coming trader going by the handle name of CIS, pronounced Shisu in Japanese, a reference to his prowess as a video game player. He's so good at fighting games that he once proclaimed inevitable the demise, the Shisu part in Japanese, of anyone going up against him. Unlike Takashi Kotegawa, he has never revealed his face, nor has he, to the best of my knowledge, confirmed his identity. Still, for the sake of convenience, since his username can mean multiple things in both Japanese and in English, I will be using his purported real name, Takayoshi Mori. Okay, so what's Takayoshi Mori's backstory? While he has been profiled by Bloomberg in the past and has a sizable following on Twitter, both facts lending credibility to his bona fide as an operator with a net worth north of $200 million, in a nutshell, Mori's is an even more implausible version of Takashi Kotegawa's success story. But first, let's have a look at his strategy. That all-you-can-eat get-together was a turning point for Mori's career, and marked his evolution from what was essentially long-term value investing to short-term momentum trading. According to his autobiography, it was by talking to successful traders like BNF and Bibirion at that get-together that it dawned upon him that judging a company to be undervalued or primed to post good results going forward is an entirely subjective assessment. The more successful the trader, he reasoned, the more they make buying and selling decisions based on short-term price movements and chart patterns, as well as on technical indicators. Basically, while BNF found success in contrarian rebound trades during the bear market of 2001 and 2002, Mori adopted a philosophy based on trend inertia. 上がり続ける株は上がり、下がり続ける株は下がる. Rising stocks keep moving higher, falling stocks keep trending lower. In his book, he contends that after a hot streak in either direction, people instinctively expect a move in the opposite direction to quote-unquote balance things out. This is a well-known psychological bias, of course, and he further contends that, at any rate, the stock market is not a game of probabilities, so the notion of balance is incorrect. As a result, there is no telling when a trend will reverse. Or put more simply, can't stop, won't stop, GameStop. He argues that one needs to formulate a hypothesis before entering a position, and cut one's losses short should the market move against us. It's better to assume you're missing some important piece of information and cut your losses short, rather than becoming a bag holder. Similarly, he views dip buying as a type of contrarian rebound strategy, so he's not much of a fan. The same for averaging down, which he views as one of the cardinal sins of trading. You can detect elements of BNF's bull market strategy in Mori's approach to trading. If you'll remember, in part 3 of my BNF series, we analyzed how he is often on the lookout for laggards within a particular sector or industry. He mentions the steel-making sector in particular, and observes that core companies like Nippon Steel or JFE Holdings, etc., tend to rise in tandem with the broader Nikkei 225 index. For whatever reason, oftentimes, a company in this core group of stocks will lag the others, and this presents a buying opportunity. Mori recounts a similar episode in his book. Starting in 2017, there was a bluster of buying activity around the buzzword of factory automation. Several factors contributed to this, including the Japanese government's push toward the implementation of work-style reforms and an increase in productivity. Now, the New York Stock Exchange is open for business on January 2nd, unlike the Tokyo Stock Exchange, which remains closed for an additional 2 days. Seeing a surge in buying activity for Japanese ADRs listed in the US, Mori built a bulky position in names like Yasukawa Electric, Omron, Renesas Electronics, Fanuc, etc. on the first day of trading in 2018. This was a massive position, probably worth north of $100 million, but his gambit paid off, as names in this industry continued trading at elevated levels. Then came earnings season, starting with Yasukawa Electric, which posted year-over-year comps showing an increase in ordinary profit of 62%. However, this was already baked in, and the price dropped 4% the day after earnings. Mori then started unwinding his various positions, not just in Yasukawa Electric, but across the board, reasoning buying support would evaporate from the sector as a whole. Then, after further consideration, he actually turned around and shorted the Nikkei futures. After all, he reasoned, Yasukawa Electric and Fanuc are direct components of the Nikkei 225, so weakness in these two names was likely to bring down the whole index. His instinct was spot on, allowing him to realize gains of over $10 million. This episode shows us that, unlike Takashi Kotegawa, Takayoshi Mori appears comfortable drawing from both the long and short sides of the force. Another anecdote has to do with the famous JCOM debacle, when a Mizuho Securities employee's misplaced sell order sent the stock price of a newly issued IPO crashing down. Takashi Kotegawa made close to $20 million on that trade by holding the bulk of his position overnight and selling when Mizuho was forced to buy back the shares. Unlike Kotegawa, Mori knew almost from the get-go there had been a fat finger error. He fired up his browser and within a couple of minutes had confirmed that the massive sell wall, totaling over 610,000 shares, was several times the number of total shares in issuance. Something was amiss, and he intended to profit from it. Unlike Kotegawa, though, depending on the severity of the losses incurred by Mizuho, he thought there was a good chance the trade would be reversed and nullified, so he offloaded his position as soon as he could, for a profit of close to $5 million. He then immediately parlayed his profits into shares of Mizuho Financial Group and Nintendo. This was the right move, in that it made it less likely for the original transaction to be reversed, since it created a chain reaction with account balances and shares in multiple companies being shifted around between dozens, if not hundreds of parties. The book obviously contains interesting insights like these, but stories stretching the limits of credulity can be found in equal number in its pages. For example, he claims to be responsible for up to 30% of the trading volume in big names like Toyota. Admittedly, this figure apparently only applies to the morning session, specifically to the first hour of trading between 9 and 10 a.m., the percentage of the daily volume being under 10%. But still, you'd think making this information public would negatively impact his trading. He'd be like Nick Leeson in the movie Rogue Trader, a massive player betting on one side of the trade, with the rest of the market piling on the opposite side. There's also the fact his origin story is basically the plot of the 2008 movie 21, except that instead of set in Las Vegas, the setting of Mori's early triumphs appears to have been suburbia in Japan. According to his autobiography, published in 2018, as a teenager with access to a modem in the early days of the internet, he would look up the latest information on how to beat Japan's ubiquitous and euphemistically termed recreational arcade game machines. The window of opportunity was apparently only a couple of days for each strategy, but this was more than enough for Mori and his team of fellow teenagers to profit tremendously. By his account, he had managed to earn the equivalent of just under $200,000 by the age of 20 this way. It was part of this money that fueled his foray into stocks the following year. Needless to say, I view this as a fanciful embellishment, which under normal circumstances would allow me to offhandedly dismiss the whole thing as internet lore. But the fact that Takashi Kotegawa seems to acknowledge Mori's existence, the two even quote-unquote appearing in a magazine article together, makes me want to give him the benefit of the doubt. To some extent at least, because even after doing hours of research online and reading through the bulk of his autobiography, I really don't have much to show for it in terms of actionable specifics related to his trading style.